Welcome to IVSA Chart Analytics, your best signals stock market indicators. IVSA Chart Indicators is based on the time-proven Wyckoff-Williams volume spread analysis. It tells you when you should be in and when you should stay out. No more second guessing. It features a stock screener that allows you to follow the smart money. You virtually get in before the public does. Profit with the smart money. Simple, accurate, and available on desktop and mobile devices. Test drive our IVSA chart now.
Thank you, Studio B. Hello, welcome to the all-new stock review with me, Trishna Patel. We will be looking at the stocks covered in corporate profile this past week. And I have JC here from TradersTruthRevealed.com who will help you understand these stocks from a technical standpoint. Thank you, JC, for joining us today.
Thank you, Trishna. It's great to be back after a long break. And I'm back here to analyze a couple of stocks which will be posted by my colleague here, Trishna.
So JC, shall we start off with IGB REIT? IGB REIT broke above its downtrend line at RM1.17 in April this year. And it has since surpassed the horizontal line at RM1.25. Can you elaborate on that?
Yes, now if you look at the IGB REITs, which is actually a real estate investment trust, it was previously in March was doing around 124 and it came off to 110, 114. Now remember at that time there was an anticipation of an interest rate hike by the Bank Negara, so subsequently it came off. But analysts has even warned that this was happening much earlier. On the next slide you will see some of the sell recommendation. So finally down to March, and there was, you can see also there were a lot of green arrow marking up around April, and there were a buy recommendation sometime in April 2014, because at that time the reports were saying that there was a 6.6% dividend yield if you buy at about RM1.14, RM1.10. So that becomes a bargain. Now since then the market has steadily moved up because the interest rate hike news has been priced in. So you can see there were a lot of smart operators, money moving in and buying, that denoted by the red uptrend arrow now. So you can see that was a rising market with lots of sign of strength coming in here, and then finally the market broke through to 120 where the evidence of the smart money operator were accumulation, but the best time to be really accumulating was around RM1.16 and 120. At this time the market has definitely moved down a bit, partly this could be the dividend payment.
So any hotspots investors should be looking at right now?
Now if you look at the IGB REITs in here, just like what I've been saying here, what we have, the last year you could see there were a lot of hold calls and a lot of sell calls coming in here, and there were subsequently two buy recommendations. At this point the market still has a bit of upside. Now don't forget the market has made a steady move from 122 ringgit to 130, almost 130 in here. The upside we're talking about is about almost 140. That represents about another 10 cents, about another 10% up there. It's maybe possible because of the improved economy that we are seeing now. So that's the upside we are looking at.
So now let's move on to EcoWorld Development. I personally find this stock interesting as it's managed a return of 614.79% in just a year. And EcoWorld Development has gone from 61 cents to RM5.82. So JC, can the stock price go even higher?
Yes, at this price you can see that the EcoWorld has a very lofty valuation at 53 times PE. That's certainly very pricey. And at the same time you could see from the chart, they were still supported around 5 ringgit or 4 ringgit 80 cents to 5.80. Definitely at 5 ringgit 80 cents you could see smart money were really selling up as that. But moving forward to the more recent July to August, you could see the markers that I put in, which is the down red arrow and as well as the down red arrow line that you see on the right side of the chart. That's certainly showing sign of weakness. At this stage I would think investors should stay away unless you really know what's going on the development of the property, especially for EcoWorld.
Okay, that's fascinating. Now what should sideline investors be doing right now?
Now if you look at the Bloomberg research that we have in here, there were a lot of R happening now on June. The R label there, that's a lot of analysts are recommending. Now, typically, as smart money, or at least looking from a price volume standpoint, we don't like stocks that been heavily recommended or been mentioned a lot on news. That's where smart money begin to take profit. So you could see that that's what the market, in this case for EcoWorld, is mushrooming down. So do be very careful. But there are certainly other stocks on property that one investor or trader can look at, but certainly beyond the scope today.
And we have also covered GlobeTronic's technology. Now, JC, what does your price and volume chart have to say?
Now, GlobeTronic has been riding a very nice uptrend since March 2014, where there's an influx of foreign funds really buying the small and mid-cap stock. Now, also from the IVSA chart, it doesn't take a genius to guess what's happening in there. There were a lot of accumulations. You could see the green arrow bar coming in, supporting as the price moved from 3 ringgit 30 cents all the way up to 4 ringgit 30 cents. At 4 ringgit 30 cents, there was still some more support, and finally the last push up to 470, right? At this price at 470 in here, you could still see a lot of green arrow, but do be careful, market may likely congest sideways as it has moved up since March this time.
GlobeTronic has been ramping up production in the second quarter of this year to prepare for the launch of new smartphone model by the second half of this year, and it's expected to contribute from 28 to 31% of financial year 14 to financial year 16 revenue. Now, do you see this as a potential catalyst that will trigger higher stock prices?
Now, like it or not, GlobeTronic will profit or benefit from the influx of the so-called smartphones. Now, the global economy that is recovering, also US is recovering in terms, also coupled by the China demands for handphone, will prove that this stock can go higher. Again, it is as good as anybody guess. But judging from it, if there are more recommendations you see from this Bloomberg research on buy call, this is going to move higher.
Now, let's move on to Malayan flour mills. It is currently trading at an undemanding forward PE of 11.4 times on basic EPS. And Maybank IB Research is valuing MFM at 2 ringgit and 70 cents based on 15 times financial year 15 price over earnings. Now, do you think the valuation of 2 ringgit and 70 cents for MFM is fair?
Now, compared to EcoWorld that we have, Malayan flour mills, certainly valuation are quite steady at this moment. Now, remember, flour is certainly a control price in Malaysia. So any margins that they're going to raise is not going to be coming from the Malaysians. So they have to look for growth in the ASEAN region, perhaps from Vietnam or from Myanmar from that case. Now, having said that, there were streams of lots of accumulation happening around 160 to 165 denoted from the chart. As you can see, the red line marker, there was suddenly lots of sign of strength, which is the green arrow. That was the area where smart money was buying, and certainly moving forward when the smart money began to push the price up sometime in July, and finally making its first sign of weakness, which is denoted by the red marker. That's the first sign of profit taking. So we could see the market pretty much top out at this current stage, unless there are more stimulus coming in from the news as well as from the fundamental of the economy. This stock is likely to move sideways for the time being.
MFM is currently Vietnam's largest flour producer and is looking to enter another non-regulated market, being Myanmar. Would you think the entry into Myanmar will be a potential catalyst to raise stock prices?
Certainly true. If you look from the Bloomberg research, there hasn't been any coverage of the buy recommendation, with the exception sometime in early April and May. Now, any of this movement going into Myanmar certainly will prompt more analysts writing this. That will certainly push the price go up. Now, remember, from an insider movement, a lot of the buy and sell recommendation will push the smart money to go in before the analysts recommend, as well to sell before some of these analysts recommendation too.
So now, JC, since we have you here, any hot stocks for the week?
Yes, I certainly have one for our audience who is listening now. Now, the stock pick for the week is definitely a Huat. Now, Huat is a home furnishing based off, if I'm not mistaken, in Muar or Batu Pahat. They are into the home furnishing, medium cost to low cost, and they've been doing pretty much well since I first recommended in sometime in mid-2013. At that time, the stock price was only doing about 76 cents, and since now has almost doubled to hitting 1 ringgit 45, 1 ringgit 50 cent. But what is certainly great now, again, look at the green arrow marker. There is certainly numbers of those hovering at 1 ringgit 30 cents, 1 ringgit 25 cents, and also fairly well priced at a PE of 6 to 7 times. That's very, very cheap in my opinion. So you also have signs of strength coming in at the support around 125, 1 ringgit 30 cents with a dividend yield of 2.3% and also a ROE, which is a return on equity at 11.2%. So with that, coupled with the fundamental, coupled with the IVSA chart that you can get it completely free from our website, ivsachart.com, this is certainly the stocks I want to take a look next week. Thanks.
Thank you, JC, for the insights. Well, I guess that's all the time we have for today. Have a good trading week. Back to you, Studio B.